Vancouver's condo boom has hit a wall, and what was once a dream for developers and investors has turned into a full-blown nightmare. Over 3,000 new condos now sit empty across Metro Vancouver, nearly double what it was just a year ago. The average price of a downtown condo has dropped to $710,000, down 5% from last year. Investors who bought at the peak could be staring at losses of $60,000 or more, while developers are struggling to keep towers afloat in a market that simply isn't there anymore. Staff layoffs, projects entering receivership, and mounting financial stress are now the norm. Premier David Eby, caught between frustrated voters and politically connected developers, is watching what was supposed to be his housing legacy crumble in real time. The warning signs have been flashing for years, but the city kept building. Between 2020 and 2022, Vancouver became the epicenter of a condo speculation frenzy, unlike anything seen in decades. Investors, flush with pandemic savings and borrowing at historically low rates, snapped up units without even seeing them in person. Pre-construction sales centers had lineups stretching down the street. Developers were launching towers before breaking ground, confident they'd sell out in weeks, and they usually did. By early 2022, a typical one-bedroom in downtown Vancouver was selling for over $720,000, and two-bedroom units were easily crossing the $1.05 million mark. Investors weren't interested in square footage or layouts. The goal was flipping contracts before closing, pocketing $100,000 or more without ever stepping foot inside the unit. This wasn't just downtown. Burnaby, Coquitlam, and Surrey all saw pre-sale towers pop up along transit corridors. According to recent data, investors made up 55% of all condo buyers between 2021 and 2024. Many were buying multiple units, not to live in, but as short-term investments. Today, the aftermath is clear. Entire floors empty, lobbies silent, and buildings that were supposed to be vibrant communities feel like ghost towns. In a Burnaby tower completed in early 2025, only 65% of the units are occupied, leaving developers and investors scrambling to cover costs. The crash began fast. By March 2022, the Bank of Canada started aggressively hiking interest rates to curb inflation. The overnight rate, which had been 0.25%, soared to 5.25% by mid-2023. Mortgage rates followed suit. A buyer who could afford $3,600 per month at 2% suddenly faced $5,200 or more at 5.5%. Pre-sale deposits of $60,000 to $120,000 were suddenly at risk. Some buyers walked away entirely, forfeiting deposits rather than taking on unaffordable mortgages. As of October 2025, over 3,000 new condos remain unsold across Metro Vancouver, according to CMHC. Some estimates put the number closer to 3,500 units. Developers are no longer required to report unsold inventory, so these numbers are conservative. Greg Zotti, a veteran developer, said, "The last time we saw this level of unsold developer inventory was 25 years ago, back in 2000. The market slowdown," he notes, "has been building since March 2022, but now the impact is undeniable." The empty units are concentrated in suburbs optimized for investors: Burnaby, Coquitlam, Surrey, and Richmond. Units averaging 450 to 480 square feet, designed for high rental yields, were perfect for speculative buyers. But with interest rates rising and regulations cracking down on speculation, investor participation has collapsed from 55% to just 8%. Anne McMullen, CEO of the Urban Development Institute, told reporters, "New condos cost more than 75% of Metro Vancouver residents can afford. The majority of the population is priced out before even stepping foot in a sales center. Construction costs have skyrocketed, land, labor, and materials, leaving developers stuck. They can't lower prices without major losses, but carrying empty units is expensive. Mortgage interest, property taxes, and strata fees pile up monthly." The layoffs are mounting. In June 2025, West Group Properties, a major developer, cut 10% of its workforce, citing delayed projects and rising costs. Rennie Group, a marketing powerhouse in Vancouver's condo market, cut 30% of its staff earlier that year. Receiverships are also rising. Thin Properties, for example, had multiple projects placed into receivership in 2024, owing hundreds of millions to lenders. The Eclipse Tower in Burnaby, 95% complete, sits empty with construction stalled. Investors are feeling the pinch personally. One Coquitlam buyer purchased a pre-construction unit in 2021 for $640,000 with a 20% down payment. By completion in early 2024, comparable units were selling for $580,000. Monthly carrying costs of $3,300 now far exceed potential rent of $2,100, leaving the investor losing $1,200 a month. Across the region, nearly 80% of leveraged condo investors are now in negative cash flow, with average monthly losses approaching $600, double what they were in 2022. Many are considering walking away, risking foreclosure. The presale assignment market, once a goldmine for investors, has collapsed. Contracts that once sold for $100,000 plus profits now trade at 10 to 25% below purchase price, if they sell at all. Many are forfeiting deposits, sometimes over $100,000, rather than closing. Older condos are selling better than new towers, which tend to have tiny layouts and lack parking, features owner-occupiers want. Developers are offering free parking, storage, or even cashback, but the incentives aren't enough. Discounts of up to 25% are now being offered in flash sales. The benchmark condo price in Metro Vancouver sits at $710,000 as of September 2025, down 5% year over year. Downtown Vancouver prices fell from $1,250 per square foot in 2024 to $1,190 in 2025. Active listings are up 15%, with days on market now 33 median, more than double 2021 levels. The sales to listings ratio sits at 11%, a clear buyer's market. Rents aren't helping either. Average two-bedroom rents dropped from $3,400 in 2024 to $3,150 in 2025. As developers and investors try to rent unsold units, increased supply is pushing rents down further, creating a vicious cycle of falling values and shrinking rental income. Premier David Eby faces a political tightrope. He created a standalone housing ministry in November 2022, promising to make housing affordable. He implemented anti-speculation measures, including the speculation and vacancy tax. But critics point out that 99% of British Columbians are exempt from the tax, limiting its reach. In August 2025, He publicly rejected calls from developers to loosen foreign investment restrictions, arguing that offshore capital had fueled speculative buildings that now sit empty. Meanwhile, the federal government warned against crashing prices, preferring to focus on affordable housing supply instead. This puts IIA in a difficult political position, balancing local affordability with national housing priorities. Despite ambitious promises, Vancouver is building fewer homes per capita than it did 50 years ago, even with double the population. Housing starts dropped 60% in March 2025 compared to the previous year, largely due to collapsed demand for multi-unit construction. Projects that were supposed to break ground in 2024 have been canceled or delayed indefinitely. Developers aren't launching new projects because pre-sale thresholds required for financing are impossible to meet. Banks now require at least 50–60% of units sold within 12 to 18 months, and in the current market, that's simply unachievable. Government policies at all levels, municipal, provincial, and federal, have added to the cost burden. Development cost levies, infrastructure fees, energy efficiency requirements, public art contributions, and affordable housing mandates all add up. Vancouver's 2025 city budget included a 4% property tax increase and an 18% hike in utilities. If you've made it this far, you probably care about what's happening in Vancouver's housing market as much as we do. So, take a second, hit like, subscribe, and turn on the notification bell so you don't miss future updates on the real estate crisis in Canada.